Another big earnings day out of China. Let's cross over to Bloomberg Stephen Angle in Beijing with the numbers from Air China and China Life. Steve.
Yeah, I think the chart that we just showed was Shanghai Airlines, which, of course, it was gobbled up by Air China's competitor, China Eastern, recently, or is in the process of being done so. Air China shares in Shanghai in the opening minutes of trade, they are surging 4.4% higher. A mixed set of results from the corporate pillars of China, Air China, also China Life Insurance. China Life Insurance, I'll get to those results in just a minute, but that stock is down by about half of 1%. Air China first half profit more than doubling. Fuel hedging gains offset plunging international travel. Air China is the largest international airline in China, also the world's biggest air carrier by market value. The airline and its Air Macau unit boosting domestic passenger numbers some 18%, while total passenger numbers rose 11%. The airline, like its peers, scrapping to return to profitability. Air China last year posted an annual loss of more than $1.3 billion, its first annual loss since listing in 2004. Li Lei at China Securities in Beijing saying that Chinese airlines have had to turn to the domestic market to seek growth. That's helped them offset the fall in traffic on overseas routes, but at the same time added to competition on the internal routes in China. Very competitive here. It's a big reason earlier this month Air China struck a deal with partner Cathay Pacific to raise its stake in that airline and start cooperating more closely with its Hong Kong-based cousin. A $1.5 billion yuan paper profit in the first half from fuel hedging, also helping Air China weather that 10% drop in international passenger numbers. All airlines have been hit by the global recession, of course, and also throw in the concerns about swine flu. Now, the carrier, Air China, says domestic competition also will hurt yields for the rest of this year. It's lowered full-year passenger number forecast by about 1% and its cargo target by about 4%. The airline saying higher oil prices and fluctuating interest rates will increase the difficulty of the group's operation going forward. All right, more than half of the analysts surveyed by Bloomberg News have a buy rating on the 8 shares of Air China, which will begin trading in just a few minutes. As for China Life Insurance, the world's biggest life insurer by market value, says first half profit rose from investment returns, and the company will seek opportunities to boost income from securities holdings. Net income climbed 15%, missing analyst estimates, however. China Life net realized gains on financial assets, which reflect returns from the stock market, surged 16 times to 11.9 billion yuan. That was the good news. China Life boosting equities to 13.5% of its portfolio at the end of June, up from 8% at the end of last year, and thereby reaping the gains that we've seen in the market surge so far this year. The 8 shares have performed in line with the Hang Seng Index, up about 41%. Again, those 8 shares begin trading at the top of the hour. 17 of 25 analysts polled by Bloomberg News rate China Life 8 shares a buy. And the investment returns, Linda, are helping buffer a slowdown in premium growth this year at China Life. Yes, of course, their main business is life insurance. Net premiums earned and also policy fees rose 11%, slowing from a 24% pace a year ago. Back over to you.
All right, Stephen Angle, thank you so much for that.